Hi, everyone. Very, very warm welcome to all of you. Thank you for making the time to join us today. After those two videos, I don't think I need make too much more of an introduction about what Andy tries to do and why we're putting the South Asia convening together. My name is Sucharita Kamath, and I lead Andy's work in Asia in partnership with some wonderful partners that you will see on the panel today. So before I hand it over to our moderator, Dr. Nirmal, for today, I would just like to call out our partnership with the Lanka Impact Investing Network, who are the national partners for the GSG in Sri Lanka, who have anchored and co-designed this session today with us as a preview of what is to come in February of next year as they hold their Sri Lanka GSG conference. But I will let Nirmal and the team tell you a little more towards the end of this panel. With that, Nirmal, I hand this over to you to take the session forward.
Thank you very much, Sucharita. I want to all of you based in Sri Lanka, good evening, and to everybody watching over here, good morning, good evening to all of you all. Fantastic to be here. We have a great discussion panel today on a very timely topic, I would say. Today we are talking about from ecosystem to collaboration in impact investing, in particular building a South Asia impact investing platform, one of the most significant and strategic regions of the world. So this entire session and the purpose will be driven on how regional collaboration can play an important role in the impact investing space, in particularly to support MSMEs and SMEs in their growth trajectory. We are looking at ecosystem alignment, diversified funding models. So we got some experts in today's panel that I will be dwelling deeper in conversation with them to understand what their thought processes are. And we are looking at practical pathways as well in order to identify the challenges, the gaps, and the opportunities that present. Fantastic to be here. And I would like to warmly welcome the three panelists. In today's discussion, I have with me today Chandula Abevikrama of the Lanka Impact Investing Network. And I have Chalinda Bekon of representing Inventures. And I have Charlotte Bednock from GST Impact. She's the head of investment vehicles over there. Welcome you all.
Pleasure to be here.
So probably I will channel my first question to you, Chandula, who has a wealth of experience in the South Asian region, coming from a very strong banking background and now to an impact investing background and working with MSMEs, not only in South Asia, but across the Asian region in particular. So Chandula, my first question to you is, from your experience in building Sri Lanka's ecosystem, what structural gaps do you currently see preventing South Asian SMEs from accessing regional or cross-border impact capital?
Yeah, so it's a very important question, Nirmal. First of all, from the point of view of the impact creation, South Asia holds the vast opportunities and possibilities all the time. But to do that, actually we're talking about the small entrepreneurs. One of the things for them to connect into a greater empowerment engagement through various other stakeholders, what I see is the challenges not only in Sri Lanka, but all the South Asian countries I see. There are a number of initiatives that need to take place. Greater impact creation for the society and the environment all the time. What happens here is on the entrepreneurship space, where these ecosystem players, particularly the entrepreneurs at the SME level, even the startups, lack something in these three areas. Firstly, they need to be commercially viable, short, mid, and the long term. Secondly, they need to be scalable, short, mid, and the long term. Thirdly, they should be sustainable, short, mid, and the long term. Now, for instance, for them to really drive that space only, they can really connect it to a greater stakeholder engagement with the others. Now, I see there's significant gaps in the entrepreneurship area, the commercial viability, leave alone short, leave alone mid and long term, even in the short term. There is no scientific approach to entrepreneurship in Asian context. There are a number of missing links are here, and also collaborative engagement are here. Graduation process also is a shortcoming there. So I see significant gaps in the entrepreneurs in the small and medium and small, even the commercial level. I see the significant gaps in the commercial viability of these enterprise and entrepreneurs. Now, that has to be kind of really worked out scientifically, and also bring so much of engagement. And despite so much of multilateral engagement, like the greater institutions like the World Bank, ADB, all these, yet we see that there are significant gaps of people, entrepreneurs, understanding the commercial viability in the short, mid, and the long term. Secondly, as I said, the entrepreneurs to enterprise to create a greater impact to the society and the environment, they need to rescale. They can't have a very small level. Even a small business have to become commercial, bigger and greater. So the commercial viability and the scalability is also something which these entrepreneurs need to understand. They need to scale. They need to look at the journey path and the distance and the destination that they need to really go on this scalability map. Then only you can create impact in the short, even in mid and the long term. So the thirdly, the sustainability. Now the sustainability is, a lot of people talk about sustainability, but not many understand what really sustainability is. It's not only kind of creating sustainable initiatives relating to the climate, energy, and all these things, but also entrepreneur who has a passion for kind of an impact or social enterprise. But then succession planning is a major gap in the sustainability aspect. So I think this is where these entrepreneurship gaps are really a worrying factor for matchmaking, particularly pipeline creation for global impact investors and many other partners to come on and partner with these institutions or entrepreneurs. These gaps are remaining, and it's widening. And I think there is not much people who are really attending to these things. And that's where I see the entrepreneurship programs, which is initiated by many institutions globally, fails to sometimes look at driving the scientific commercial viability, scalability, and sustainability, so that the greater number of impact investors as well as other stakeholders can power them and partner them.
Thank you, Chandula. So I think in essence, what Chandula was trying to say from a structural gap perspective, it's the commercial viability, scalability, and sustainability. And I think moving on to you, Chalind, I'm pretty sure you might agree at a high level with Chandula's comments on those three aspects. But I would like to pose a question to you from your background in particular, from capital raising perspective for SMEs in this region. What type of blended or innovative structures and models can South Asian SMEs look forward to or identify in their pathway to growth, Chalinda?
Sure. Thanks, Nimal. I think the first thing that we need to understand, if you look at specifically the region in countries like Sri Lanka, and even Nepal and a few others. So South Asia, I mean, I'm trying to exclude India as much as possible because India is slightly more mature, or much more mature. The maturity of the founders are still, quite weak at the moment, right? So it's very hard for you to kind of use systems or tools or even instruments that are used in mature markets and mature ecosystem and implement them here and expect the same outcome, right? So that's very, very important to, I think, over the years doing this, that's the most important thing that I've kind of understood is that, it doesn't work. Not every company is cut or not every entrepreneur is cut from the same cloth. So you need to understand, what are their limitations. So there's a lot of education that needs to go on. The second part of it is a lot of these businesses for a very, very long time, you know, they've become lifestyle businesses, but over a period of time, they have become, small businesses. So it started off as a lifestyle business, but then slowly, 10, 15, 20 years later is when they have become a small and, growing business. And growth you need to define. So it's not a linear growth, right? So if you look at the companies that we work with, especially the technology startups, growth for us is very simple. It's a hockey stick growth. Whereas if you're talking about SMEs, you're not really looking at a hockey stick growth. You need to understand and define startup doing this. Uh, some of the things that has worked for us, again, I'm only talking about from an experience standpoint. I'm sure there are various other models out there. Uh, I think revenue-based financing has really helped to work with certain companies, and that again it depends on the industry, it depends on the product or the service, but the majority of the time that's a model that has worked well for us. The other thing that we also want to do is what we call demand linked milestone tranches, right? So typically what it means is if you're doing an investment, you will have certain milestones in terms of, okay, you build a product, or you kind of very superficially define what that milestone is. But in our case, what we always try to do is try to define it from a demand driven standpoint. So if there is a purchase order or there's a distributor contract that is coming in, and that becomes the execution point where the tranche is released and not for anything else. Um, so those are kind of two broad ways that has worked for us. Obviously, there are various other things when you're doing regional, there's local currency risks that you have to kind of look at it, and working with, various tone agencies to see whether you can, or DFIs to see how you can, mitigate some of the risks. But in a nutshell, I think you want to have a understanding of, you also need the specialization. That's another mistake that we've also done, is because we feel that one model is will cover every single industry, which is not the case. It's always better to have a very, very specific model and an understanding. So for an example, on our ventures, we only do B2B fintech, and that's because we understand that fintech domain far more better than the other domains that are there. And as a result, we built an entire ecosystem around the fund to support fintech companies. So as a result, from a portfolio standpoint, our IRRs are at about 38%, DPI is about 1.8, and we are among the top 5 globally in terms of performance as a fund. It's purely because of being very focused, very niche, and ensuring that all the incentives are kind of aligned to specific goals.
Thanks, Chalinda. Maybe a quick follow-up question on that, especially from a South Asian perspective in the more not so mature markets. There is this notion that there's a fear of equity. Even though they understand what equity is, they prefer a loan or a debt instrument. Now, for a fund like y'all, how have you navigated those challenges, both from an education perspective, awareness perspective, and from a risk mitigation perspective to these MSMEs?
So Nirmal, I think from a fund perspective, um, I wouldn't say our target is there's MSMEs, right? We are very much with the startups, and it's all technology companies. But our technology companies build certain solutions for MSMEs. So that's where our link comes in. So for an example, We've invested in a company called Shopbook, which essentially has your MSMEs use something called a day book, credit book, that's how they call it. So everything is on a mobile as opposed to a physical book, right? So you're absolutely right that people are afraid of equity in this part of the world, especially the MSMEs, and I think they should be, because equity, I don't believe the market, especially Sri Lanka, Bangladesh kind of markets, we're not matured enough to play with equity. So that's why revenue-based financing and various other things are a lot more better instruments than playing equity, because you also don't have liquidity as well. And it takes much more longer, 10 plus years for exits to take place. But for us, because we are looking at it from a technology angle and we're looking at the startup, it hasn't really impacted us. We've already had, one exit. We've done 14 investments in the last 2 years, 2.5 years. We've had one exit. One of our companies have been acquired, and we have about two that have gone through, or rather currently going through term sheets for acquisitions. And every single company has raised follow-on funding from regional funds in the region. So they've gone into their Series A and so on. So it hasn't impacted us as a fund, but our knowledge basically comes from the fact that our startups are creating products and tools for the MSME community that is out there.
Thanks, Shalida. I now move on to Charlotte. Probably the first question to you, Charlotte, in this round would be, how can global networks like GSG support South Asia as a region in particular in aligning around shared principles, data standards, and strategic commitments, specifically moving into 2026 and beyond?
Brilliant, thank you. So I think for a network like GSG, where we have this global network of national partners, including Lynn, who are here, I think there are a number of things that are very critical for us that help this alignment, as you say, around principles, standards, data standards, and strategic commitments. I've grouped these into four major areas. One is really around supporting the promotion of regional alignment and multi-country initiatives. So we're seeing this through things like convenings, like the Sri Lanka Impact Summit next year, for example. And this gives opportunities for greater and deeper collaboration, cross learnings, and opportunities to better position regions and sub-regions at the global scale. Sorry. The second area, quite linked to this, we feel is around enabling peer learning and bilateral collaboration. So this can be done in a number of different areas. For us at GSG Impact, we have three core priorities that we look at in the impact investing ecosystem. One is around driving policy change for more positive policy to drive greater impact investing. The second is around increasing impact transparency and data collection, so that we have a better measurement of that impact. And then the third is really looking at capital mobilization through investment vehicles. And we've seen across our global network a lot of different initiatives, successes, and also some failures, which has been really critical across these three areas to share those learnings and enable replication in other markets. So this has been a great opportunity, and that's not only across regions in Asia and Africa, say, but also drawing on learnings from Europe, East Asia, North America, etc. as well. It's very much truly a global network. The third area linked to this is really supporting different partners to build shared policy positions. So thinking about opportunities around this cross-border collaboration and engagement to create real results. So we've seen this as an example with Bangladesh national partner and their advocacy for tax incentives. So this has really been able to demonstrate for other national partners how they can coordinate with each other to drive policy reform and to share those learnings as well. And also what we hope to achieve at a global level is by having a global practice for policy making is to try and drive more multi-country policy messaging and reforms as well. Then finally, the final point is around facilitating the harmonization of standards and data infrastructure, for example, around market sizing, but also other standard settings. We're seeing this drive, and I'll speak to it a little bit later, towards more mandatory impact transparency and global regulation around data. So it's really very useful, I think, to share these learnings, to through the network showcase what is happening in different regions and different countries, and support our national partners to take a leadership position in driving forward data and transparency changes, policy changes, and also embedding new impact investing practices, structures, and models as well.
Thank you, Charlotte. Maybe a quick follow-up question on that. Essentially, the notion on the impact space is that there is no real competition, but an opportunity for collaboration. And you highlighted the importance of collaboration a number of times during your answer to my previous question. I just want to understand from your experience and GSC's commitment across the world, what are some of the challenges you have faced or you have seen countries facing when they try to coordinate and collaborate with each other, all with the notion of creating impact? But where do they really struggle? What are the real gaps or the challenges that you have seen, Charlotte?
Yeah, I think a lot of it, so a lot of the collaboration works very successfully around knowledge transfer and that peer learning. Where the challenges come in, I think, is shifting from that knowledge and theory into action, because every market is structured differently. And so where we may have successful policy reforms around pension funds and their ability to come into impact investments in Africa, that may be very challenging to implement in practice within a South Asian context, for example. So I think that is often the challenge of how you shift that. The same with investment vehicles. We've seen some really exciting, very large scale wholesale vehicles working extremely well in some of our East Asian markets and European markets. But whether those structures are ready, and to the point earlier around, the readiness around certain instruments like equity in other markets is also, sometimes a challenge. So it's really key to recognize where there are potential learnings and where direct replication can happen, but more often than not, that within every market, each of these initiatives needs to be readapted to that local context for it to be relevant and feasible. And also, I would say the importance of those local networks as well. And this is what's really key to our national partnerships and why they are so grounded in their national ecosystems rather than just a purely global network, is to be able to try and bridge those global learnings, but be able to actually implement them and establish them in a local context very effectively through that local knowledge, but also the connections and networks within those different markets as well.
So essentially, locally driven, global ready. Thanks, Charlotte, for that. So moving to you, Chandula, I want to now touch base on the impact investing architecture per se, right? So how can national advisory boards, you head the National Advisory Board in Sri Lanka for impact investment, how can platforms of similar nature help collaborate and create a unified impact investment architecture in South Asia, Chandula?
Yeah, I think Charlotte articulated very well about this knowledge transfer because there are different institutions, engagements, and entrepreneurs, and enterprises, and stakeholders in different shapes and sizes. Now, I think if you look at the South Asian context, for ages, almost for 100 years, as Charinda also mentioned, people are used to debt and financing. And when it comes to impact investing, and when it comes to social entrepreneurship empowerment, so we have a mismatch between the investing vehicles and what the entrepreneurs require. Now, for instance, ticket size is a very, very key, because some of the entrepreneurs' ticket size does not really made affordable for big investors to land in countries like Sri Lanka, Nepal, or Bhutan. India is there, but still there are a number of social entrepreneurs in a small ticket size. So I think in defining the architecture of the whole gamut of the impact investment solutions, one has to understand the different shapes and sizes of the entities, particularly the social entrepreneurs or the entrepreneurs per se in countries like Sri Lanka and small countries, and even the medium and big countries like India also, the diversity of the scale of their operation. And I think that has to be, because there is no one fit to all. So there cannot be one solution or one investment vehicle that come in and then really bring their investment tickets across to the country. So you need to map it out very well. And that's why I said that very clearly. There has to be a scientific mapping out this entrepreneur requirements and needs, as well as the facilitations. And then, as Charlotte also very clearly said, there's knowledge transfer. It's critical because are we going to go on with so-called lending as debt-based, or are we going to graduate them to next level of equity and all the small entrepreneurs to be made comfortable for that? So that's where there has to be significant scientific knowledge transfer, as Charlotte very clearly mentioned, and also the ability of the global players or the regional players who are in the investment space, whatever the background or the funds they access, with these pension funds or whatever the commercial funds, when they need to really recognize the fact that the solutions or the financial products that they bring really uh, having properly understood the needs of not only the very specific countries. Now, if you look at the diversity you have from entrepreneurs from the, okay, Shalinda was speaking about tech. Now, we are talking also about the entrepreneurs at the grassroots level, like agriculture and educational, healthcare, hospitality, and diversity of entrepreneurs, particularly in Asia. And some of these entrepreneurs are directly connected to, by virtue of their enterprises, poverty elevation, employment generation, products that can really impact the society. And then all those things need to be recognized. And then the wider group of players, like particularly the impact, now, for instance, the need of creating of the fund of funds for architecture for that. For instance, which countries need that? And I mean, Sri Lanka is ideal kind of a country to have that kind of a, because our ticket size are very small when it comes to small and medium size. So that knowledge, that scientific approach, and that facilitation absolutely needed. So I think one has to really look at the big picture, and not only look at the big picture and gather a group of people in this space who can see eye to eye. And then I think once that kind of synchronization, that harmonization comes, then we can organize these things, what need to be done in the short term, mid term, and the long term. And that's where I feel that there is significant need to look at this more granularized basis than looking at on the surface, Nirmal.
Chandra, for the benefit of the wide audience participating today, maybe you can take a few moments to explain at a very high level what a national advisory board is, what are the objectives typically. Maybe you can take Sri Lanka's example, the potential partners that you have on board now at the NAB, and whatever partnership opportunities which are there to partner with a NAB typically in Sri Lanka. Maybe you can take a few moments to give a very high level overview.
Yeah. So NAB, before that, I need to, I think Charlotte would do the best just to enlighten her next time about the Global Steering Group for Impact Investing. They have a kind of a global agenda. Now we have one of the countries. I think now we have about 60 countries. So Global Steering Group for Impact Investing, probably I will leave it to Charlotte to highlight that their mandate and their journey map for Asia as well as the whole world. Now, they have a unique kind of engagement to facilitate the impact investing based on certain foundations. Sir Ronald Cohen founded it, and then the team that driving this whole thing, and then based on that, NABs are created, bringing in countries like-minded stakeholders in the banking and the finance, the central banks, investors, the entrepreneurs, and regulators and other stakeholders together. The whole idea is to look at the social impact entrepreneurs emerging space and how they can really create a greater impact for the society and the environment. That's the bottom line. And then how the stakeholders. So what we have is in a national NAB or a GSG, we call Sri Lanka GSG Sri Lanka. So the kind of strategic impact that you can create through entrepreneurship and investment, so that so you will overcome a lot of social and environmental issues. And then you bring certain tools like impact assessments, impact management, and all those things into space. So what we have is an is a like-minded institutions and engagements with number of institutions who has the passion, who understand that impact investing, not only investing, impact entrepreneurship is supported, so that you created a strong impact entrepreneur ecosystem, and then also create a strong impact investing landscape to support that. So it's an emerging thing country to country, but by and large, it is the mandate or the global envision of the GSG global, that we bring it and make sure that it facilitated to our countries, and and we make it in the way based on our local requirements. As I said very clearly, country like Sri Lanka, we are still in emerging space, particularly on the area of entrepreneurship at the very level of grassroots level, and as SME level, which is more number of employment generation, the social impact, and also rightful product and service are afforded to people, covering the respective country's environment as well as society.
Thank you, Chandula. This is an invitation to all the participants watching this from whichever part of the world. If you have any questions to our wonderful panelists, please drop in the Q&A chat box, and I'll be more than happy to take it at the end of today's session. Shalinda, maybe the next question is to you, particularly in the area of deal readiness and pipeline visibility, two very important areas, specifically looking at when you're dealing with multiple companies, investment opportunities, and supporting entrepreneurship. Based on your experience and the current work that you do with entrepreneurs, what are some of the practical steps that you can advise both the participants and the entrepreneurs to look at when improving their deal readiness and pipeline visibility?
Sure. So as an investor, I think one of the things that I've kind of shifted in my opinion, in the last couple of years is that you have to build your own pipeline. So to that note, we do a lot of workshops where we basically scout the entrepreneurs, we reach out and we work with them, and we kind of, do the improving and all of that on our own. So much so that we actually do not rely on any kind of other party who is doing or running programs or this thing, because what we felt was that as an investor, we have a certain, ethos in the way that we work, we operate, certain governance structures that we have, and we want to make sure that we inculcate that early on in the founder. So we do that on our own, and I think that has really paid dividend for us in terms of finding and attracting very good companies. So we did that very early on 3 years ago when we launched Ventures. And what it has happened now is that our own portfolio companies plus, and that visibility goes into ILPs as well as our GPs and our portfolio. They now start recommending companies as well, because they will also follow the same practice. So that has a natural kind of a network effect, which actually brings in a decent amount of good quality companies that comes in, and much of the vetting is done by them as a result. So whenever somebody gets referred to us, they will be able to say, okay, this company is good because of X, Y, and Z, but they have these gaps in these particular areas, and that's why then we are very, very focused on that. So I think the lesson to anybody who's getting into investing is that you have to be the one who does your pipeline, because first of all, you need to start off with the thesis. What is your thesis? You want to know, what's the style that you want to operate. Really do a little bit more soul searching, as they say, as to what type of investments, what is the expected return, how fast do you want to go, what are the no-go areas, all of those things. And then once you build that framework, then you kind of go to market and essentially do the initial first um, uh, acquire the first companies that you want to work by you, right? Rather than doing a call out. And it's the same principle that, entrepreneurs, when they start, we always tell the entrepreneurs, you have to first go and acquire your first 10, 20, 50 customers manually, so that you understand their pain point, and then you get a lot more visibility into or insights into what you're trying to solve, right? It's the same thing. It's on the reverse side also. It's very much, as an investor, is also very common. The other thing that brings us a deal flow is we work with I would say, a number of other VCs in the region, where we collectively invest in deals. And that has also worked very well for us. Again, we partnered with some of these VCs because of our ethos and how we kind of operate. There is that cultural match. We believe in the same things when it comes to how entrepreneurs should be groomed, and so on and so forth. And as a result, we do a lot of co-investing. So this is very, very good, because you end up, you're spreading the risk, but at the same time, you're having multiple people go through that deal from different angles, and sometimes you might not be privy to certain things. So those are the typical, the two main ways that we essentially kind of operate, and again, that has really kind of worked for us.
Charinda, from a risk capital perspective in frontier markets in South Asia in particular, let's talk a little bit about blended finance mechanisms, specifically on the risk side of it. It can be guarantees, foreign exchange hedging pools, first loss structures, or even outcome funds to a particular level. Where do you see this moving? Where do you see South Asia grabbing those opportunities, and how do you see ecosystem providers and entrepreneur support platforms coming into this setup?
Okay. I'm not sure if a lot of people will agree with this. So my views are slightly different when it comes to risk and all of this, right? Uh, as an investor, there's essentially two risks, right? There is the risk of failure. So you invest in a company and the company fails and you lose your money, right? And that risk is essentially 1x. So if you put $1 million, you lose $1 million. The second risk for an investor is the risk of omission, right? So what risk of omission is, where a startup or a company came to you, you didn't invest, and that company became successful, then your loss is a lot more higher, right? So the way that I look at it is in that in that lens. So everybody understands, especially on the, at least for me, the VC space of it. We all know that it's very high risk, so we kind of understand. And then because we also play in the very early stage, we also know that a company that is coming to us does not have all their ducks in a row, and that's why we are good at that. So the way that I will look at it is, so various things that we've done. So for an example, we've done investments in India, Bangladesh, Sri Lanka, And then we also have a few other more mature markets as well, right? So as a portfolio, I've de-risked it by having multiple investments in multiple regions where the the maturity is at different levels. So in Sri Lanka, I might not get, if I do an exit, I might get a 2x or a 3x return, which is good still, considering where the market has been for the last 5 years, and liquidity where it is right now. But in India or the UK or wherever that I invested, that's going to give me a lot more higher. So as a portfolio, I've been able to kind of reduce that risk significantly by kind of having a blended approach in terms of geography. The other ways of managing some of this risk is, uh, like I said earlier, we don't do a spray and pray model, right? So the biggest risk that I see in this part of the world is that everyone's trying to cargo cult what's happening in the West, especially in the US, where the power law essentially drives. So the power law is, for those who don't know, uh, it's the theory that you invest in 10 companies, 9 will fail, but one will, give you a 50 or 100x return. Now, the problem with that in this part of the world, in emerging Asia, is that cost of capital is so high, you can't afford to have 9 failures. B, the one successful company will not actually give you a 100x return. So our approach was essentially to be very, very specific. This is why I said earlier, the way that we mitigated our risk was also by being very, very focused. So that is B2B, fintech, that's our first fund, and we became the best at that. And that was our vision and our goal when we launched. It's like, how do we become the best VC in South Asia for fintech investments? And that kind of allowed us to bring in. What it also happened, and we were not privy to it when we had this vision, but now it's very clear. Whatever that's happening in India in the fintech space, the founders will share it with everybody because we all are part of one group. And the same tactics will test it in Sri Lanka, or they'll test it in Bangladesh. And then there's a learning. So same thing starts happening. So people started sharing, the entrepreneurs started sharing, their operational tactics to, playbooks for various things a lot more openly, because you're not really trying to cannibalize on the same market. You're building for different markets and so on and so forth, but the lessons are the same. So that was really good. So we saw a very sharp increase in the quality of the entrepreneur, the maturity of the entrepreneur. The second part of de-risking is, because we play in the region, we have certain investments where, um, together through by merging them, it becomes a larger company. So one company in Bangladesh, they're doing, if I take an example, they have something called Hishabi, which is the same thing that we have here in Shopbo. So there are two different markets. Again, very, very challenging, because you're selling to MSMEs, but combined together, it becomes a larger company, and then the potential becomes a lot more significant. So I think those were some of the ways of doing it. Obviously, you can't, we've just had floods. You can't really predict for act of God type of events. And you just kind of, have to go past through it and bite the bullet and really at some point take the decision. And I think the biggest risk that I've seen, especially in Sri Lanka and, in other emerging Asian, South Asian countries, is that we take a long time to decide on a transaction. It's like 6 months, 9 months. That's you're just wasting time. And I don't know why that is. Probably because our economies grew at the back of labor arbitrage, so we don't really, cost our time. And I'm very cautious about it because, I know my hourly rate, and if it's taking longer than, 4 or 5 hours, it's not worth my time, and I don't want to do the deal, right? So we get everything to run really fast and make a decision, and just take it forward.
Thank you, Chalinda. Over to you, Charlotte. I think you've been silent for a long period of time. But coming from a GST perspective and your mandate in particular, I would like to ask you this question in terms of the global trends that you see. And then how can South Asia leverage on these global trends? What are they in particular? And how can they use those trends to position the region as a regional hub for impact investing?
Mhm. Brilliant. Well, I mean, building on maybe the last question, I think one of the key areas is really around the growth and mainstreaming of blended finance. I think we've seen a particular shift in this year as global aid has very much shifted in its mandate, and I think that's supported the growth of the blended finance ecosystem. Additionally, it is becoming more sophisticated. So we're seeing a wider range of different types of instruments, fund structures being used as well. But most importantly, we're seeing more and more donors, DFIs, philanthropic foundations using catalytic capital more deliberately and really thinking about how they can leverage their catalytic capital to bring in more private sector investors. So this could be a great opportunity for South Asia, where it could anchor itself as a testing ground for blended finance structures, tackling key impact challenges, be that climate resilience, MSME growth, digital inclusion, gender, etc. So it may be interesting to think about whether you look at regional blended finance platforms, potentially trying to pre-package deals for commercial investors, but also thinking about the language piece. Globally, it still is a challenge to bring in commercial investors. They're still not necessarily as attuned to blended finance structures, which are a bit more complex than their more traditional models. But it would be great to see more and more commercial investors, both local and international, coming on board. Which maybe links to a second key trend that we're seeing, particularly in emerging markets, is the rise of new capital sources, in particular more local capital mobilization and linked to that, more diaspora capital being leveraged for impact investing. So we're seeing this, for example, where I sit in Africa, far more local institutional investors coming into impact funds such as pension funds, government, sovereign wealth funds, etc. And so it's great. It would be great to see more and more of that happening and more strategically happening in South Asia as well. So thinking of that both in terms of the policy reforms that might be required to mobilize that local capital, as well as more and more vehicles available to bring in that capital as well. Additionally, diaspora investors are a growing segment of the market, and I think that's a very exciting opportunity to leverage for investing to create impact in local markets as well. So it'd be great to see more and more of these products looking out and structuring opportunities for these local investors to come in and see them as a key role in their capital stack. A few other sort of broader shifts that we've been seeing as well is we're seeing the rise of mandatory impact transparency. We're seeing global regulation moving towards clearer ESG and impact disclosure, which is a great opportunity to scale and also mainstream the impact investing market. So I think it's a great opportunity for South Asian markets to differentiate perhaps by getting ahead of this disclosure, by bringing on board and embedding some of these global regulations earlier. So it's key to be working to align national frameworks with these global standards from the outset. There may be two more points, I think, from my side. One is a broader one around sectoral shifts. I think in certain impact sectors, we are seeing shifts in growth in different areas. For example, in the climate space, we're seeing quite a significant shift away from mitigation towards adaptation and nature-based solutions. So I think it's, again, an opportunity for investors across South Asia to think about more nuanced impact investing and how to bring in some of these shifts, both in terms of the sectoral focus, but also some of the instruments being used within certain sectors as well that could be leveraged within different funds and vehicles. And then finally, and again, I mean, I sit in Nairobi, so we're seeing this a lot. We're seeing much more global South collaboration between different markets. And I think this is a great opportunity, linking back to what I was saying earlier around cross-regional and cross-country knowledge transfer, leveraging different types of investment vehicles and structures, de-risking as well, to Chalinda's point, through investing in different markets. And that may be, across different regions, not just within single regions. And so I think thinking strategically within South Asia, where on the global landscape there may be natural ties or similarities between markets, and leveraging that kind of cross-regional collaboration as well.
Thank you, Charlotte. So, in your opinion, what does South Asia need most? Is it capital? Is it standards? Is it trust? Or is it coordination?
Oh, big question. And I would love to hear from Chandula and Chalinda as well, who obviously have, a greater understanding of the market, the local markets. One, I'd say, broader lesson that we've learnt is for capital to flow effectively, the enabling environment needs to be set up for that upfront. So I do think spending time really thinking about who the key players are, back to Chandula's point earlier, within the broader impact investing ecosystem, and how mature they all are. What we find is they all need to be working effectively for impact capital to flow well. So I think that is one critical piece up front that needs to be done. So it's around supporting not just the supply or not just the demand, but across both ends of the spectrum, as well as the intermediaries in between. And then linked to that is thinking much more broadly around this policy environment as well, and how are different markets supporting policy reform, and also potentially cross-border policy initiatives and opportunities to try to enable structures to operate more effectively, and also to be able to mobilize capital at scale more easily. And we've seen huge successes in this working, I think, as a sequenced approach in other markets, where that policy reform has enabled new and more appropriate investment vehicles to be launched, which leverage new types of capital and are able to actually serve potentially underserved market segments as well. So maybe it was a slightly cop-out answer. I'd love to hear from the others as well, in terms of what is the key priority. But I do think that building up the enabling environment upfront is very key for effective capital mobilization at scale.
Thank you, Charlotte. I think, Chandula, I'll move on to you just to take you from what Charlotte just now mentioned. But in addition to asking the same question on what does South Asia need the most, capital standards, trust, or coordination, I would like to also take you to this traditional debate that we have on capital providers, whether it's finance first or impact first. And is that the real problem that we are having with relevance to tailor-making, custom fit solutions for impact investment? So I would like to get your opinion with your wealth of experience in the region.
Yeah, so being in the banking and the finance sector for almost now close to 50 years, and travel in Asia and globally on this banking and the finance and investment side, what I see, there is a big gap between the sophistication of the investment vehicles and the unsophisticated nature of the entrepreneurs. So there's a huge gap. And I think Charlotte also mentioned the coordination, the knowledge transfer is critical. And particularly, I see this conceptually, there are many things on the table. But from the point of view of the affordability to the entrepreneurs, the availability to the entrepreneurs, accessibility to entrepreneurs, it's not really there. So because it's not there because of the shape and size of these solutions or the products are diverse. And particularly, if we can really, there is the coordination that is needed, facilitation that is needed to matchmaking, particularly bringing some of the sophisticated financial instruments or the investors, the global investors, and bring them to a little bit of level where people can see eye to eye, because the unsophisticated nature of the enterprises in the South Asia, particularly I see on the SME side, the process of graduation is not taking place the way it should have been. The reason is that most of the SMEs or the small and medium entrepreneurs in South Asia heavily depend on the bank finance or the finance company finance or some kind of finance, credit, debt. But what happens is, as a result of that, they are not able to spend enough resources in the research and development innovation, which is needed to map out the proper impact creation to more people in more places more often. Now, without research and development innovation as a critical requirement for these enterprises to reach more people in more places more often with their products and services, then that gap is who is going to fill that gap. And that's where that the sophisticated nature of these impact investors or investor vehicles or other players need to really change their gears, adopt a more suitable approach, more approach which is kind of tailor-made for that particular region or the country, or based on the size and the shape of it. Now that's not really happening currently. That need to happen, and that's where there has to be, of course, on one side we have the investors and the players with various diversity of financial instruments and products. On the other side, we have the demand side. So the supply side is sophisticated, demand side is not sophisticated. So we need to really bring that gap and nurture them, nurture the entrepreneurs toward that, and then also bring the sophistication to a level where more people can be accessible and also practically affordable to them. And I think there's a significant need for that. So there need to be some sort of maybe work that is being done by institutions like GST, ND, and many others. NAB's role would be that to make sure this gap is either minimized or removed so that all these players can see it eye to eye and see the big picture.
Chandra, I'm going to ask you a question from one of our participants, even though it's mainly focused on India, but I think it's a common for South Asia. So the question is, based on the landscape, uh, what do impact investors look into in entrepreneurs or startups before infusing equity capital or impact capital? That's the question, Chandula, at a very broad level.
So I think I already answered that question at the very beginning. I mean, either way, any investor, because what happens is investors means either their funds or pension funds or some other funds. So one of the things which any investor, me, even impact investor, I would look at the commercial viability in the short, mid, and the long term. And this enterprise, whether it can reach the scale to create a greater impact in the short, mid, and the long term. Because at the end of the day, the impact depends on the more people in more places more often enrich to socially. So that they would be really come out of their social challenges and issues and economically enrich. So that for that to happen, these three things are fundamental. And that's what I always say: commercial viability, short, mid, and the long term; scalability, short, mid, and the long term; sustainability, short, mid. So you can amplify that a little bit more in going forward in all these three areas. It depends on the requirement of the respective countries, but essentially that's the key factor, Nirmal.
Right, Chandula. Moving on to you, Chalinda, maybe you can also answer the same question that I asked Chandula in terms of what do you look into from an entrepreneur's perspective before infusing capital in what are the basic things? And another question, a follow-up question on that, which has come from our participants, is that even if geographies are different, namely India, Bangladesh, and Sri Lanka, isn't the portfolio still concentrated on the fact that the risk is substantial when all three are emerging markets? Maybe you can broadly cover these two questions, Chalinda.
Okay, so the first question is around what we look for. Actually, so three things, right? The first thing that I look for is the founder's ability to suffer, right? So Because if you're going to build a company, it doesn't matter whether it's a tech startup or a SME or lifestyle businesses, you're gonna face a lot of hardship. So, that's the main thing that I look for, have the founder or the founding team has really kind of gone, are they able to suffer? Have they faced certain things? And, you can judge these things within the first 15 minutes now. I mean, I've reviewed over 10,000 businesses in the last 15 years. So you can do that. The second thing is they have to be incredibly curious about everything. I feel like founders, especially now, they because entrepreneurship all of a sudden in the last 5-10 years have become a very sexy thing to do, right? Especially in this part of the world, we were world renowned for producing the best lawyers, engineers, the doctors, and now it's the entrepreneurs that are there. But you need to have the curiosity. I think that's something that is lacking. And then the third and final thing is the obsession over uh, the customer, right? So you have to be obsessed about the customer's pain, and really trying to see how you increase the quality of life, or whether the situation, or through, I mean, that's what your product or service is ultimately going to do. So those are the three things. And now the important thing there is to know that the idea of the business isn't, because it's not an important thing. It's these things are going to pivot, they're going to change, and they're going to evolve and take different forms as time goes by. So that's not something I'm really too keen on, because for me it's about the founders and their ability to kind of this thing. And for me, I like this Richard Feynman quote that says basically you should not fool yourself, and you're the easiest person to fool. So I pay a lot of attention to what's the BS the founders is telling themselves, not the others, because sometimes they're so convinced, but why is that conviction? Where is that coming from? So those are the main things essentially. The second, so once I think the moment you do that, you can easily disqualify 50% of all the companies, because if that is not there, then it doesn't really make sense to kind of take it forward from there. The second, once that is done, the next important thing is, so everybody talks about growth, even from a small and medium businesses also talks about growth. But the most important thing is the growth of the business is directly proportionate to the growth of the entrepreneur. So the entrepreneur has to be having a growth mindset. And if the and I see this a lot, where there is a product and a service which has the potential to scale to multiple geographies, overseas, and become a billion-dollar company, but the founder doesn't have that mindset, or maybe the founder doesn't want to do it, right? And there's nothing wrong in being that. So that's the second thing that I look, because that's where, as an investor, I want to make sure that my objective and his or her objective is aligned when we are taking, or when we are making an investment, and so that the incentives are aligned to all of those things. But yeah, that's essentially what I kind of look for. And Nirma, could you repeat the second question? It was, these are all emerging
Yeah, so
markets.
so
How
they're
do
all
you
emerging
balance?
markets. The portfolios can be different, but nevertheless, the risk remains the same, even though they're geographically different as well within the same region.
Right. Yeah. I mean, look, there's always that risk. I think any investor, whether you are here or even in the US, if you're investing, there's still the risk will be something else. It might be that you'll get outcompete by a Google or a Facebook or an Apple or somebody. Um, Risk is part of the business. If you want to avoid risk, I think the recommendation that I can give is, don't invest in startups, don't invest in small and medium businesses. You have to be comfortable with risk. And because I don't think you can mitigate. Everybody talks about mitigating risk. It's just there is no sure way of doing that, right? You can take certain precautionary measures, but that's about it. The only thing that you can do is when you do an investment is, you do your due diligence. Like I said, how do you evaluate? You want to make sure that you have some domain expertise in that investment, and you're not really investing because you're following a trend, or somebody else is investing and you trust them, so you decide to put money. You need to have some domain expertise, which is why in our case we only focused on the fintech side of it. But and then once the investment is done, you want to know how to add value. And even investors, it's very easy to add negative value to a company. And I've seen this happen here in Sri Lanka, where very profitable businesses go raise capital, and then they crash because now the investors want them to grow fast. And as a result, you could get into payment delays. There is what we call, payment receivables pile up. So there is something as premature scaling. So you want to know some of these things. So you want to know, what is your insight into that industry and what's your skill set. And that's something you want to make sure that you align very, very early on, and not really getting into investing in startups or small businesses because it's a very cool fad at the moment.
Thank you, Charinda. Maybe this is for you, Charlotte. Bit of a tricky one. What is one myth about impact investing that must end in 2025? Maybe we can look at a South Asia focus on this.
So my biggest pet peeve, I think, is the difference between real and perceived risk. And I think we often have the conflation of the two, which is one of the biggest challenges, I think, when investing in emerging markets, but also in the impact space as well, is that the perceived risk is often much higher than the real risk. And I think a lot of this is founded in the fact that there isn't enough real data available to better actually quantify what the real risk is, and therefore to disprove the myth around perceived risk. So this is why we're seeing it, and it's great to see the rise of blended finance and de-risking mechanisms, first loss, guarantee mechanisms, etc. But what I would love to be seeing is for more funds and more investors to be collecting the data more systematically, to better actually quantify what the real risk is of their portfolio and how that compares to their upfront perceived risk. So that would be my sort of on my Christmas wish is to be seeing, the breakdown of that particular myth, because I think that would help channel far more, particularly commercial capital, into South Asia and also into impact economies as well.
Thank you very much, Shala. I think our time is almost up, but I got one final question to you, Chandula. Tell us a little bit about the South Asia Impact Investment Declaration and the fund and the upcoming summit next year.
Yeah, so we are having the very first Impact Investing Forum in February from 10 to 12. This is the first time the Sri Lanka is going to be focused on impact investing. We are going to have about at least 10 leading global impact investing experts as keynote speakers, and also a number of impact investing funds also would be there. We are expecting to expose the Sri Lankan banking and the finance and the investor community to the dynamism of the impact investing. That's the whole idea. And also there is greater need this time when I was in Kyoto with the Global Steering Group for Leaders meeting. There was a greater need when I was talking to my colleagues in India and Bangladesh, that by virtue of the South Asian geopolitical, most of the South Asian countries prefer destination is Sri Lanka, and they would have a strong relationship with all the South Asian countries. India is very great relationship with Sri Lanka, so is Bangladesh, so is Pakistan and Nepal. So in the light of that, there is a kind of a urgency requirement of having a declaration for setting up of the South Asian Impact Investing Fund, declaration for that, so that all the South Asian impact investing countries can really have a collaboration and engagement and also coordination between countries, making Sri Lanka as the hub and engagement. So we expect about 250 delegates for the first ever Impact Investing Forum. As I told, there will be a couple of major keynotes, presentations by the experts. But prior to that, we'll be having a 2-day session done by global expert on for the executive immersion program for the corporate level leaders, or getting them the exposure onto the impact investing global landscape.
Thank you very much, Chandula. So once again, it's been a fantastic opportunity for me in particular to have this conversation with three great panelists talking on a very important topic on how do we build the ecosystem, how do we ensure collaboration in this impact investing space. Special thanks to the organizers for giving me this opportunity, and also a special thanks to Charlotte, Chandula and Chalinder for joining this afternoon to share their insights, their opinions based on their vast experience in the landscape. Thank you very much to all the participants also who joined us and for the questions that they sent across. Over to you, Sucharita.
Thank you so
Thank you.
much. You've done all the thank yous. Another round from us to all of you. And also reminder to please stay on for the next segment, which, as we've pointed out, sort of dives a little deeper into impact measurement and sort of IRIS 2.0 and its inclusion of circularity metrics. We'll have a bit of a mental rest bio break for the next roughly 10 minutes or so. So those of you who can stay on, please do. And to the rest of you, thanks very much once again.
Thank you.
Thank you.
Thank you very much.